Dr. Mann, on a Thanksgiving, we're supposed to take a bigger, broader view with you. Somebody mentioned there another major bank looking for zero, looking for slowdown, looking for recession. Can you be so grim as to tell us we're going to begin to approach an NBER recession?
Well, of course, the NBER recession is the two consecutive quarters of negative growth. That's the official word. I don't think we're going to be looking at that. That doesn't imply that we aren't going to be looking at a very difficult situation for a lot of people in the market. I think that you have said that you have this two-stage recovery. One is manufacturing doing quite well. Having a trade deficit in durable goods or capital goods is actually a good sign for business investment going forward. But of course, the labor market, the continued weakness of the labor market is something that is going to drag the whole economy down. So, you've got two speeds. One is extremely slow, actually in reverse. I mean, that's what the initial claims is telling us. That's in reverse. The capital goods trade deficit is actually positive. But that's going to keep us from being in, official recession. But it's going to be very grim. I think we can't.
Catherine, can you give us the near-term, medium-term outlook then at Citi for you guys right now? Just your base case in terms of the outlook, the contrast between the two.
Well, as I say, I've sort of outlined the fact that the continuing claims and the initial claims are pointing to a very difficult period of time over the next few months, possibly into the second quarter of next year. Our official forecast is that the U.S. economy will have returned to the pre-COVID level of GDP in Q2 of next year. But I think that has to be considered in light of this burgeoning caseload in around the country. That's clearly going to weigh on that forecast.